Hello and welcome to this Tolley Seminars Online lecture. We're going to be taking a look at the current direction of travel with regard to HMRC's digital agenda. I'd like to first emphasise that what I'm saying in this lecture isn't necessarily going to happen, but it is certainly looking into the future, the sorts of things that might well happen given the announcement that was made by the Chancellor in the budget, and also based on further information that's been released by HMRC in the recent past. Some of this we have showcased at Tolley around the country at the Iris World events through the talks that me and my team have been giving there. So I'd like to first of all emphasise that this is something that might happen, but I'd also like to just focus for a minute, if I may, on what we consider to be digital. And digital really means the lack of human interaction. In other words, that the computer generates something for us that is helpful. And I'd like to start by giving an example with regard to, say, the renewal of your TV licence. If you move address or you want to renew your TV licence, you can go online and it's a very straightforward and easy experience. The same with regard to applying for a new driving licence when you move house or when you need a new licence. Again, that is straightforward. It is linked to your passport and it all happens automatically with very little interaction. It's a very quick and simple service, provided that you are able to log onto the website and do it for yourself. However, it's a slightly different experience if you want to change the address to which your car is registered, because that is not so easy. Yes, there is an online form, but if you need to make the changes, and you need some extra help, you need to ring a helpline, and sometimes the form is not easy to populate. So where the experience is easy, we tend to find that actually complying with the requirements that are made on this is relatively straightforward. So I'd like to first of all look with regard to the whole tax strategy at what might be driving this. And there are two ways of looking at it. Is this part of a scheme to provide a better experience for the customer, an HMRC, in other words, the taxpayer? Or is it part of a cost-saving measure? Now, it's hard to know for certain what is driving things, but I think it's fair to say that there is a bit of both involved. And in fact, if you get the online experience working really well and you get an instant response, you get an instant reply to the query that you might ask or to the calculation you've just submitted, you can improve the customer experience whilst removing a swathe of cost, because you can remove a large part of the human interaction that is required to deliver the answer. So therefore, the next generation HMRC could be providing a better service because everything is automated, or as much as possible is automated, whilst at the same time reducing the cost of providing that service, all of which must be good on the whole for the collection of taxes in the UK tax system. Now let us turn our attention to how HMRC currently work and the type of work that they do to support the collection of taxation. And as you can see, in any one given year, HMRC churn out something like 245 million forms, i.e. they process 245 million bits of paper or process bits of guidance. That delivers 200 million outbound letters by HMRC, 73 million calls taken on their helpline, and 70 million pieces of individual posts that are received. Now, if a lot of this can be digitised, not only will we be saving the planet with regard to the number of trees that we need to sacrifice to deliver all of this, but we will also be able to deliver a quicker service. That is the whole rationale behind HMRC's agenda. We also have to remember that it isn't going very fast. Originally, the project was presented as a project that would be running through to 2020, but now the progress in HMRC's terms is measured by months as opposed to years. And the question, quite reasonably, is this pace going to be sustainable? Now, we've got to bear in mind that this is not a project we need to start getting worried about in 2019, because suddenly something new will be delivered in 2020. In the olden days of IT development, you'd basically work for years on this big project, and suddenly there'd be this big bang and this project would be released. And suddenly, overnight, things would change. That's not the case now. This is going to be using the agile method of product development, which basically means that HMRC will keep bolting on and making changes in real time over a sustainable period. So therefore things will gradually change over time as opposed to a sudden big bang. Now this could bring very many long-term benefits with little extra effort required by the advisor. So let us turn now to HMRC's grid, which shows currently in 2014 how they correspond and deal with taxpayers and how this will look by the time we get to 2018. And as we can see, a lot of the interactions that HMRC have with taxpayers is largely very human resource hungry. We are looking at a large amount done in face-to-face, a lot of it done by processing bits of paper, which means rekeying information that may well have already been put into some form of software or online system, and a lot of telephone calls. But gradually, as we move through the next few years and we get to HMRC's optimal position, which is 2018 and beyond, we will see there'll be a significant reduction in the human interaction required. There'll be much less face-to-face, much less paper, and much less telephone, with a lot of the services that HMRC need to provide to taxpayers to keep the system running to be provided digitally. Now, many of us might sit back and say, this is impossible, this will never happen, this is very difficult to do, there's all sorts of security issues, etc. But those of you who are used to using online banking, those are very much a very different world. The banks have managed to sort out security and keep bank accounts secure. And if you think about how things are done now, you can go onto your iPhone and transfer money to somebody in real time very quickly. Only the other day, my brother reminded me that I owed him £100, and he sent me a text saying, don't forget you owe me £100. As soon as I received a text, I went onto my online banking, used my fingers, the security to get into the online app, and I transferred the money. This was about 8:30 at night. By 9:30, I had a text back from my brother saying thank you. So it just goes to show I didn't need to start writing out a cheque and then putting it in the post to my brother. He then needs to pay it into a bank, which is stamped by a cashier, no human interaction, all done real time, digitally. My brother got a better service and I found it so much easier to do it. So therefore, we do know that the digital experience can be a very good one. I'll give you another example. I was looking to find out how much it would cost for me to take a taxi from one place to another to see if it was worthwhile. And there were various taxi firms I tried, and one taxi firm had this brilliant website where I simply typed in where I wanted to start, where I wanted to finish, and it would then give me the fare in real time, straight away on the internet, all digitised, no need for human interaction. I went into another website and I had to fill in this form and type all the details in, and then get a note back saying they were going to email me in a couple of days' time. Not only that is resource hungry, but I have to wait for my answer. So which particular service did I prefer? Well, the one that gave me the instant answer. And with regard to paying your tax, the one that's going to give you the instant answer as the amount of tax you owe and when it's due. So turning to now, what does this actually mean? Well, moving as much as possible into real time. Digitising the service that is provided, minimising the human intervention, and hopefully, therefore, minimising the amount of error that can be made because everything will be processed through hopefully a reliable system. Everything in one place, in essence, automating large parts of the tax system. As I mentioned before, the online banking revolution has really changed the way that we interact with our banks these days. So let us turn our attention to the digital account. And what I'd like to talk about is, what is it? Who will have one? Why would you need to look at it? How much of it will be pre-populated? And will there be something equivalent to a 31st of January deadline? Well, these are very good questions. But if we think about things, the digital tax account will have a large number of things pre-populated. I've always found it bizarre that when I go into my online self-assessment return, when I'm filing my tax return, usually in December or January, just before the deadline, it does amaze me that my employer, LexisNexis, has filed all of the details of what they've paid me and the tax they've deducted and the benefits they provided on the P11D. They've filed all of that electronically to HMRC, but I have to rekey the whole blooming lot again into my self-assessment return. If I could go into a system, it's already pre-populated, information that they already know, information that's already been filed, that would make things a little bit easier for me. And therefore it will mean that potentially we could be doing tax throughout the year rather than having the 31st of January rush. Now, I still think that the 31st of January deadline will be very relevant, of course, to end of January 16. I don't think it's going to change that quickly, and probably very much business as usual by the end of January 2017. But things could dramatically change as HMRC start building out their new digital services. So I'd like to pontificate, and this purely is pontification and genuine speculation of what things might look like for the self-employed. So emphasising then, this is only my personal view, a view that is shared by others around the profession and others that have contributed to the material that I'm presenting today. Reference the talk that Andrew Hubbard gave at the CIOT Warwick conference very recently. So let us pontificate as to what it might look like if you're, say, a self-employed plumber. And you go onto the system in a month and it basically asks you one question to start off with. How much did you receive from your customers last month? And if you're an honest person, you would fill that number into a box. Now, in order for this to be valid for tax purposes, HMRC will need to be looking at what levels of turnover they're prepared to accept the cash basis. And you might remember the debacle of extending the cash basis with regard to the self-employed recently, based on the Office of Tax Simplification recommendations. So it will require rethink as to how much HMRC are prepared to accept in cash rather than pure accounting basis. So once you've populated that information onto the return, you then click Carry On, and you get a second question. How much did you spend on materials and other business expenditure? And you again populate that box that specifically says, don't tell us about any car journeys or use of your home, because we'll calculate that separately. So question 3 might well be, how many business miles did you drive in the last month? And you just simply populate the number of miles into the box, and it automatically calculates your deduction at 45 pence per mile. You then go into a next box that basically says, how much time did you spend working at home in the last month? And there are already preset HMRC agreed figures for deductions for working at home. And you just tick the appropriate box and it will automatically give you the appropriate deduction. Question 5 might ask you a question which is around, did you spend more than £500 on more than one item? Which might mean that HMRC are just checking in to see, did you spend anything on capital, i.e. plant and machinery? Now, given the way that the current rules work with regard to this significant AIA, which is currently £500,000, will drop to £200,000 from January, any capital expenditure, of course, is allowed a deduction in any case. But what this might do is actually trigger the system to then say, if you did spend more than £500 on one single item, they might give you the opportunity to submit the invoice to support what you've spent. And we have expense systems these days. You would just take a picture of it on your iPhone and submit that online. And then the output might simply be this. Based on the information you have just provided, we have calculated your tax liability for this month is, say, £450. That figure appears in the box, and then you are asked if you would like to pay the amount that you owe, and therefore you know that you are now up to date with your taxes. No need to worry about whether you're saving enough money for your taxes. Now, to start with, this might well be a voluntary system that is introduced for the self-employed, but it might actually help them manage their cash flows and their tax cash flows. Because the way that things are done at the moment, we file very historic information which might show a certain profit at a certain level, but if our profits have fallen, our cash will have fallen, so by the time we come to pay the tax, we might run out of money to pay that liability. Whereas if we're paying our taxes as we go, we know we're not going to be charged interest, we know we're not going to have any horrible surprises. And that might be it as far as Joe the plumber is concerned. No annual return, no filings of accounts, no need for tax adjustments, just simply pay as you earn your money, or pay as you go. And will we actually need an annual reconciliation? Well, maybe one day we won't. I think we're a long way from actually getting to that point. But as you can see, this will not only allow HMRC to collect taxes as we earn the money, but also to pay out things like tax credits as we earn the money for the self-employed. Now, the thing that HMRC will be very keen to instill into the system will be things like risk triggers, where HMRC might question a certain amount of expenditure you've triggered. Now, For the larger business than, say, Joe the plumber, it is highly likely that third-party software will likely be used to keep the records of the business, and that could well be filed into HMRC system in time. Now, HMRC will want to look at the risk triggers, so let's have a look into that. HMRC might be asking a question: how much did you spend last month on materials? And you type in, say, £50,000. Then HMRC would ask, that looks out of step to what you normally claim. Last month you only claimed 5,000. Are you sure it's 50,000? That could well just be you've added one more nought on the keyboard and it was an error. In which case you can correct the error before the information is even filed with HMRC. If it is not an error and it's a genuine expense, HMRC might well ask you to photocopy the particular expense, photograph it and file it into the online system so that they can check that they are happy that you are not fiddling your expenses and claiming too much. So it provides a natural reassurance for the taxpayer and to HMRC at the same time. Now, in reality, for all but the smallest of businesses, this will be data that will be captured through software packages. Now, software packages, if put together correctly, will not just look at risk triggers that HMRC have highlighted, but also opportunity triggers. If that £50,000 is a genuine expense, why is it so high? What does the business spend their money on? Can they really afford it? Which means that we can, in real time, look at the information filed on the tax account on behalf of our client, or that they filed themselves, and give proper business advice. It might be that we're doing the filing ourselves to make sure that the client is getting things correct, and we know that's a genuine expense, and we know what HMRC will be looking for to prove that that is a genuine expense of that business. But it will also give us the opportunity to say to the client, you can claim an AIA on that expenditure, or you might be able to release that expenditure over a period of time, or whatever the advice might be. But gives us an opportunity not just to advise our clients on historical data based on accounts that we prepared for a period that ended some time ago, but give real-time advice on what is really happening under the bonnet of the businesses as they go. So the digital tax account could empower more up-to-date, better information. I think there's also a quid pro quo, and that is certainty. If an individual volunteers to use this new system, and I think in the early days there could well be a voluntary system, I think the quid pro quo will be, if we filed using this system and we've actually kept up to date with the system and kept our payments up to date, we want some certainty from HMRC that they're not going to launch an inquiry or investigation into our returns, so we could sleep well at night. There might be a short time frame that if HMRC have not, for example, questioned something within 3 months of the filing, that our accounts are safe for that particular period, and therefore we get that certainty a lot earlier in the cycle, absent of course any fraud or dishonesty by the taxpayer or his agent. Now, I'd like to stress again that this is simply me and various of my colleagues hypothesising what things could look like, but one thing is for sure, things are changing. It's not a question as to will this happen, it's just a question of when. And being prepared for it, understanding it, embracing it, could find that we empower our clients to do more for themselves, and we actually empower ourselves to do more for our clients. On that very happy note, I will leave it there and come back to the subject in a future month. My name is Chris Jones, Director of Tolley Tax at LexisNexis. Thank you for listening.